Let's see if we can get long here, put a stop here, and then we could target this. Let's see if we get filled. Okay, we're filled. We're going up. Perfect. We actually want to trade. Understanding what's happening in price is one of the most important things you can do to becoming a consistently profitable day trader. In this video, we're going to look at historical price data so we could find patterns which we can use to real-world live trading. If you're new to my channel, my name's VJ. I'm on the path to becoming a consistently profitable day trader. In these videos, I share my thought processes, my wins and losses to ultimately help you become a better trader. If you want to join me on this journey, hit that like button, smash the subscribe, and let's jump into the charts. We're looking at the ES on Thursday, August 17th, and we start trading at 8:30. So far, there's nothing here that I'm interested in. Price is just chopping in within this range. Now that's 9:30, start wicking up back into the range, and there's a bunch of consolidation here where I don't want to be trading. Price started displacing lower. I see an order block here. I see some liquidity here. So I want to see if we can get short here, put a stop up here, and whether we could target this sell side liquidity. So we don't get tagged in. Price actually goes into this fair value gap, and then it goes and delivers where we thought it would. But that's okay. If we're still bearish, another thing we could do is after we saw that price came into this fair value gap is there is another order block right here, which we can go ahead get short at, and we could target these lows right here. But of course, this is why we look at this in hindsight, so we could see patterns that's happened in the past, so we could anticipate similar behavior in the future. Okay, well, let's move on now. There's a whole bunch of chop here, nothing happening. Price did take out the swing high, which makes me think that we are in a bullish program. There is order blocks right here, so hypothetically, I'm not sure I would enter this just because there is a lot of chop. I would enter here and target this. So let's see if we get tagged in. We got tagged in and we got stopped. Or let's see if we put one tick more. Yeah, we are gonna get stopped. This is just a whole bunch of chop. Nothing here is good and nothing here to trade. So why are we doing this exercise? It's to see that, hey, when we are in these narrow ranges, we should not be trading. This is where I tend to lose money a lot. And even though we're going through historical data, looking at historical prices, I'm still a victim to this. So I need to learn this lesson that if we are within a range, we just don't trade and we wait for the range to get broken. So we're continuing. Nothing here I would trade. I do see an order block right here, these consecutive down close candles. Price comes into it. We could have put a stop here and then we could target this order block right here. Would have been a 4-hour trade, but this is again, a hindsight kind of trade. There was no change of character. Maybe this wick right here, but I wouldn't really consider that a strong change of character. So I actually don't know if this is a trade I would have entered into in real life. So price comes here, takes out some buy side liquidity up here, comes right back down, it's chopping around here, and we're back inside this range. This is where having a higher time frame bias would be useful because I have no idea where price wants to go. Price shoots up, looks like it takes out some liquidity up here, but there's no change of character, so I would not enter into anything myself here. Price comes right into the mean threshold here, which is a good sign. I'm thinking wants to go up, but not a trade I would enter into here just because price also came into this bearish order block and it started rejecting away from it. In between here, there's a fair value gap. Price wicks right into there and then it goes lower. So if we were bearish, this could have been a potentially good trade. We put a stop right above this order block, we get tagged in, and then we would target these lows. Of course, this is all 100% in hindsight. It's just so our minds can get trained to see price, see what happens, so we could see similar patterns when we're dealing with live market conditions. Okay, continuing. We can put this here because we're chopping around. So here, price breaks through, and it looks like it's reaching into this gap here, maybe these relative equal highs, I'm not sure. But there is a fair value gap here and there is order blocks. So I wouldn't enter into anything here yet. Okay, and price takes out the buy side liquidity. So it looks like price came below this wick, but from my experience, it's not necessarily the highest quality trade to look for shorts. The black and green candles were switched around, as in the wick was down here and then the green candle took out liquidity, then I would consider that to be a change of character and would be a better short. But right here, price comes into this fair value gap, so I have no idea where price wants to go. Now we just have to wait and see. Good, price continues lower, hits this order block, and just continues lower into this fair value gap. So here it looks like there is a change of character. I would want to enter in long here and maybe target up here. Let's see if we get a fill, and we do not get filled. Price just goes to our targets, and it's okay. It shows that we can predict where price wants to go, and sometimes we just won't be able to join in for that particular trade, which is okay. Continuing, there is a bearish order block here, and there's a fair value gap. Price taps into that fair value gap, and it goes lower. This seems like a breaker. It looks like a low, high, lower low, shoots up. So I personally have not really traded these, so this is purely a hypothetical long. Let's see if we get filled, see if this is even a good trade. And I would target these highs. So we got filled right here. We're still in. Let's see if we get stopped. And yeah, we got stopped. Just was not a good quality trade. What I saw here is that the fact that price came here and it didn't shoot higher was a sign that, hey, we should actually get out of the trade. It is not a high quality setup because it never broke above here, as in it rejected right from this order block. So this would have actually been a good short from there down to these lows. That would have been a 4-hour trade. I do want to talk about this area really quick. There's a bearish order block, price comes right here. We could have gotten short, put a stop there, and also targeted these lows. And so if we know where price wants to go, we can use these to enter long or short. And if we did that, that would have been almost a 2-hour trade. Okay, so price comes here. It took out some liquidity, so I would not necessarily look to go short more right now. I would just wait and see where price wants to go. This is where having that higher time frame bias would be useful, but we are a little blind. Still nothing here I would trade. Looks like we have an order block. We can get long here, put a stop here, target this order block. Let's see, and we get stopped. But it's okay. That's why we're doing this, to learn. We're consolidating here. At this point, I probably would have already hit max loss and just be done trading for the day because I'm not in tune or in sync with the market, but that's why we are back testing with no risk, purely just to learn. So the swing high is right up here. I want to see price displace above that almost. This could also be potentially the swing high. I'm not sure yet, but there's nothing here I would trade. So this right here created the swing high. Price took out liquidity. There's a displacement candle. This seems like a potentially good long entry in this fair value gap and this order block, and I would target this right here. Let's see. Okay, we got filled and we got stopped yet again. Again, for the third time, this is why having a higher time frame bias is extremely important, because if we have no idea where price wants to go, we can't just continue getting long every single time. And we're just more and more bearish, continually going lower. Still nothing here I can or will trade. There is a order block here. Price comes right into this bearish order block, so we could put a stop there if we are bearish and target these lows. So that would have been a 2-hour trade. Of course, this is in hindsight just to learn and see patterns. Continuing lower. Okay, there's an order block here. We could potentially get short here if price wants to go. Just wants to keep going lower. There's nothing here I can trade. Looks like there is a change of character here, potentially. Let's see if we can get long here, put a stop here, and then we could target this. Let's see if we get filled. Okay, we're filled. We're going up. Perfect. We actually won a trade. It was a 1.4-hour trade, but this makes sense. There was a change of character right here, so we came into a buy program. Price came down and it never took out these lows. It did take a few minutes for it to get up here, but ultimately came into this order block as a good exit. And then immediately after it rejects. What I see here is a fair value gap and an order block to possibly get short on, but we just hit this order block, so probably would not make any trades yet. Okay, I mean, prices here, it is a little tempting, but we are at a discount, and so I wouldn't necessarily take this trade, but just for the sake of doing it, let's see what would happen. Okay, we would get tagged in, consolidate, and then we'd profit. That's great. This tag in is literally to the tick, so we may or may not have actually gotten filled, but it is cool to see price came right to this order block, consolidates a minute, and it does come to our target for a 3-hour trade. And right now we are in a chop. Price comes right to the CE of this wick, goes up, picks up buy side. Nothing here we can trade. Creates an order block. Price comes into this fair value gap, so we could actually enter in long here, put a stop here. I don't think we'll get filled, and not sure I would actually take this trade, but just practicing. And I get out at this order block. Let's see if we get filled. Okay, we got filled and we got stopped. This is why I don't trade in consolidations like this, because this is where I get tripped up and lose a lot of money. And that's it. That's 4 o'clock. Going through historical data on this particular day taught me a lot that I was actually wrong most of the trades I took today. And that's because I did not have a higher time frame bias. I saw a pattern and I just took that hypothetical trade, and because of that I lost hypothetical money. Probably in the next video I will try to be more selective on my trades. The whole point is to go through past data, look for patterns, and see what we can apply to live market conditions. If you enjoy this video, you're going to love this video.